Hi there, business owner. Are you looking to improve your business knowledge? Do you want to see behind the scenes of successful businesses? And more importantly, are you looking to build a better business in just 15 minutes each week? If so, you're in the right place. Welcome to the 3Bs podcast. Hello and welcome back to another episode of the 3Bs podcast, your go-to 15 minutes to build a better business. As always, hi, I'm your host Stephanie, and this week I want to go through in more detail the national insurance changes for Class 1 employers' national insurance starting from April 2025 that seems to be confusing a lot of business owners. So let's get into it. First of all, let's talk about what Class 1 national insurance is, because people get really confused. If you are an employer or a business owner who employ other members of staff through a PAYE scheme, so you get a pay slip and you have obligations every month to submit those pay slips, or weekly or bi-weekly, however you pay your payroll. Maybe you outsource your payroll, maybe you do it yourself, but you will create pay slips every month and detail all the hours that they've worked and their pay and things like that. Those employees will have Class 1 national insurance when they earn over the threshold for national insurance. Now, there's two types of Class 1 national insurance. There is the employees' Class 1 national insurance. Now, that is what is deducted from their gross pay before you give them their take-home pay. And there's the employer's Class 1 national insurance, which the employer pays on behalf of the employee. It's an extra cost to the business owner. Which is why when the government announced the increase, a lot of people started to panic and worry. But it's not always as bad as it seems. So from April 2025, any employee that earns over £5,000 in a tax year, in a financial year, will start paying Class 1 national insurance from that point. So anything over and above £5,000, they will be charged Class 1 national insurance. Then what happens is from £5,000, employers will pay Class 1 national insurance. Now, the current rate is 13.8%, and that is increasing to 15% from April 2025. So not only are employers having to pay it earlier in the year as the employees earn less, but also the rate of which they're paying is increasing. I understand that can be worrisome for a lot of employers, but the government haven't just left you all flying blind. They haven't left us all flying blind. They have put something else in place. And I caveat that by saying not all businesses are going to really benefit from this, and it's not going to help a lot of businesses. But with anything in the government legislation, some people are always going to be affected when there's changes, some positively and some more negatively. What the government have done is they have increased the employment allowance from £5,000 to £10,500 per year. Now, in order to claim employer's allowance, there must be at least one employee on the payroll earning over the secondary threshold, which is being reduced to £5,000 from April. If you are a sole director and it's a sole director only payroll, it must be you plus one employee over the threshold in order to claim the employer's allowance. The employment allowance is not a one-off grant. It's not money that's just given to you, that £10,500. It is incrementally added on to your Class 1 national insurance bill to help you pay for that, up to £10,500 per year. So if you're eligible for the employment allowance, you will need to make sure that you submit an EPS, or the person that is running your payroll submits an EPS, which is an employment payment summary, through your payroll software to claim this if you're not already claiming it. If you are already claiming it, do remember that you do need to claim employment allowance each year at the beginning of each financial year. It's not something that rolls over each year. You need to check you're eligible for it and then submit that. So once you have claimed employment allowance, when you do the payroll every week, month, bi-week, however you pay, the Class 1 national insurance liability for an employer, if it is under £10,500, will be covered completely in month one. If it is over £10,500, the first £10,500 will be taken by the government and paid by them, so that you don't have to pay it as the business owner. And then going forward, anything over and above that £10,500 per year, you would then carry on paying your national insurance bill. What that means if you don't earn you don't have a £10,500 bill in that tax year, is that you will then say your national insurance bill for month one is £2,000. That £2,000 you won't need to pay to the government. That's covered by the government. And then you'll have £8,500 left that you can then take month two onwards until it runs out, or until the end of the tax year, whichever comes soonest. I think a lot of business owners get confused when they think that this is money they're going to get in the bank. This is going to cover all their bills. And it's only for Class 1 employers' national insurance. This means that any national insurance or tax that is deducted from your employee's payslip from their gross salary before you give them their take-home pay will still need to be paid over to the HMRC each month or quarter, depending on which regime you're on. If you're on quarterly, obviously at the end of every quarter, that adds up the 3, and then it's for you on the 22nd of the fourth month. If it's every month, then the payment is due on the 22nd of the following month. And the HMRC need to receive that money by the 22nd. So it's really important to make sure that you check the way you're paying doesn't have any waiting time. So if you're making payment instantly via bank transfer, that shouldn't be a problem. It's usually 2 hours. If you're paying by alternative methods, if you're paying by check, if you're paying by putting cash into the post office, there is going to be an administration time. There's going to be time for that to be reconciled and taken by the company, taken by HMRC, and that you need to be mindful of. It's usually 3 to 5 working days. So if it's due on the 22nd, and the 22nd is a normal working day, you're going to have to go back 5 working days, not including your Saturdays and Sundays or bank holidays, to make sure you make the payment on that day before it is received by the HMRC, to make sure it gets there by the 22nd, which is the deadline. If you need a slightly more time, there is a slight little, almost like a loophole, is that if you pay by direct debit, if you set up the direct debit in your HMRC business tax account, then it will be taken on the 22nd on the due date. However, because of the way direct debits work, it does give you an extra 2 to 3 days to make sure the money is in the account. So if it's due on the 22nd, it's usually taken on the 23rd, 24th out of the business's bank account, which means by paying by direct debit, not only do you not have to remember to pay them on time, you don't have to worry about when things are due, but you also can extend the due date slightly by a couple of days. I would always recommend that the money is in there by the 22nd, but it won't be taken dead on the 22nd if you pay by direct debit. A short episode for you this week, but I hope it's been really helpful. We do have a template available, so if you drop us a message on social media or send us an email and just ask for the template, we can send you the spreadsheet we've built where you can put in your employees' names, ages and dates of birth and the hours they work and their salary. It will calculate to make sure you're paying the national minimum wage, and it will also let you know where you are now from a Class 1 employer's liability perspective and where you will be from April, so you can start making that adjustments and see if you really are worse off, better off, or almost the same given the changes to the rates and the thresholds. If you've enjoyed this and found it useful, please share it with a fellow business owner. Like, share, subscribe, wherever you're listening to this or watching us on YouTube. It really helps us to reach more business owners and help us build better businesses. And I'll see you next week for the next episode. Bye. And that brings us to the end of another episode of the 3Bs podcast. Thank you so much for listening. Please connect with us on social media. Like, rate and review wherever you are listening to this podcast so that I can help more business owners build a better business. See you next week.